Bitcoin has a local price range that it keeps going in and out of. So we'll zoom out a little bit and look at the whole picture to see if we could predict where the price could go in the short to medium term. Then we're going to get into an article about all the money that's flowed into Bitcoin financial products in 2023. Get into an interview from Goldman Sachs, chief of digital assets, on where he believes the future of tokenization and digital assets could go. Then we're going to wrap it up with a story about a Texas man who just got in trouble for not filing correct taxes on his Bitcoin profit and why you might not want to do that. What's good? Welcome back to another episode of Where the Money At. You know we're keeping it rocking and rolling. If you like hearing all the latest cryptocurrency news, hit that like button, hit that subscribe button, and join the family. Let's go. Let me share my screen and let's get right into it. So let's go to Coingecko here and go over some quick price action. So we got Bitcoin sitting at 45,300, having a crazy last 7 days, up 5%. We got Ethereum at $2,423, BNB sitting at $318, Ethereum sitting at 103, and XRP sitting at 51 cents. XRP seems to be holding at 51 cents pretty strongly. It hasn't really moved much. So let's get into the ETF overview. For the majority of the ETFs, they're kind of up. The highest one being Grayscale Bitcoin Trust, up $1.25. We got iShares up 81 cents and Fidelity Wise Origin up $1.22. So let's get into a little bit of technical analysis. As you can see, we are in a long-term uptrend that we've basically been in since the beginning of January. So let's look at the 200 EMA. We're getting pretty close to it. From what I see right here, it looks like we could head a little higher, and you know how I feel about the 200 EMA. Once we're above it, like back in September 2020, once we're above it, we're really above it. And like in 2022 of May, once we're below it, we're really below it. So we're above it right now, and it could bounce off and keep going higher. So that could lead to higher price action, but you never know. So one thing I want to look at is the fibs. Let's look at the all-time high of 70,000 all the way down to the local low of 15,000, 16,000. So if we look at the current price action, we're sitting here between the 0.5 and the 0.618. So if we look at that in combination with the big uptrend and where we could go with this fib retracement, we could probably bounce off of 35, 36,000, maybe chop a little bit and head a little higher. So we'll see what happens. We'll see what happens based off of that. So let's get into the news. So crypto investment products saw $2.2 billion worth of inflows in 2023. Now, what I want to talk about that is there's going to be up years and down years, and 2.2 is a good bit amount of money. Because if we look at from the beginning of 2023, roughly 365 days, I got 370. So roughly a year, we were up 170%. So 2.2 billion for a year that's up 170%. That's pretty good. So let's say the next year, let's say we go sideways or we chop. We'll probably stay around 1.5 billion. You know what I'm saying? There's more products and more money to come in. But what I really want you to think of is when we have another 200%, 300% year. So let's say we get to 35 and we go up 200%, 260%, and we're at $130,000 as far as the all-time high. That could easily be $5 billion that could flow into financial products, and it could be even more because there's going to be more products that's created by the time that happens. But let's get into the article. That's something I want you to think about, and the possible inflows of financial money that could come in. A mundane year of flows turns nicely higher in the final quarter of the last year as excitement rose for the incoming spot ETFs. You know, there was a lot of hype and people were getting ready and institutions were getting ready to throw their money in. And to be honest with you, the product has only been out for a month and a half. You know, there's levels in steps to this. You know what I'm saying? Like, it's not like they're going to create the products and all the money's just going to be there tomorrow. They create these products. Now they have to market these products to their customers. And then money has to flow in it over time as people start to get information and see how the returns look and how the overall crypto market looks as a whole. So this thing is going to take time. Investors poured $2 billion into the digital asset exchange traded products in 2023, making it the third largest year of net inflows dating back since 2017. Bitcoin dominated those numbers with 1.9 billion of those inflows. That's like 87% of the 2.2 billion. So of the 2.2 billion, Bitcoin had 1.9 billion of that. You know what I'm saying? So Bitcoin is dominant as far as the market share and as far as all of the ETF and the ETPs that have been created. But you know, as time goes on, Bitcoin is going to have more products. Ethereum is going to have some ETFs and some ETPs roll out. If you're not familiar with ETFs and ETPs are electronically traded funds and electronically traded products. ETFs falls under the category of electronically traded products. So I'm pretty sure BNB, Solana, XRP, they're all working on electronically traded products for institutions to get in. And at the same time, exchanges are being created to where everyday retail investors like yourself and I can also invest. But retail money is not going to move this market. It's going to be the institutions with the large hedge funds and trust funds that allocate 1 to 2 to 3% of their portfolios that's really going to move this market and really push it to the next higher price. So that's something to think about. A lot of money flowing into it as far as 2023, and we had an up year. So let's think about that moving forward. So let's listen to Goldman Sachs digital asset chief explain his predictions on the cryptocurrency market, and then we'll talk about it.
Of adoption, do you think that's going to be amplified now that these spot ETFs are trading?
Yeah, I think kind of there's two bits I'd dissect that into. So the kind of broader adoption was probably a little bit more around digital assets writ large, and so there I think in tokenization, thinking about the use of the underlying technology for transforming the way capital markets operate. I think for crypto, I think it kind of goes back to one of the points I was talking about earlier. I think we'll start to see, a steady flow of investment into this space. I think, the BlackRocks and these funds have actually started to perform very well. You start to see the asset under management grow. So I think we'll come.
So he talked about 2 points. He broke it into 2 points. He talked about the digital asset sector as a whole, and he talked about cryptocurrency specifically. So he said, the idea, the main thing that drives digital assets is the blockchain technology underlying everything that's going on. So the main use for that right now that we see is tokenization. He mentions tokenization about 20 times during this entire interview, and I'll drop the link below so you can listen to the entire interview. None of this is financial advice, but he broke it up into 2 points. He said, the ideas that tokenization and the use cases that tokenization will create as far as digital assets, and digital assets is more than just cryptocurrency. Cryptocurrency is a subset of digital assets. Digital assets is digital real estate, rights, digital property rights, images, NFTs, currencies that will be created that'll be digital. Anything that you can think of in traditional markets, there will be a digital version of, and that's what he's talking about, creating secondary markets based off of tokenization. And then he talked about cryptocurrency as a whole. As it gets bigger, more money will flow into it. There's another point that I wanted to get to around 14:30. It's a 30-minute interview, so.
Including tokenization, which you just brought up once again. And you also mentioned that you were looking to re-architect the financial plumbing so that blockchain technology can have a profound impact on the movement of collateral across the marketplace, which you brought up again as well.
Yeah.
But are those still focuses of yours right now? And would you like to elaborate on some of the other predictions, perhaps the expansion to new assets?
Yeah, I think, look, you touch on a lot of good points there. So I think in terms of tokenization, when I talk about the creation of marketplaces with the broader cross-section of stakeholders, there's no lack of appetite, from the many different forums I'm involved in globally, in terms of the cross-section of stakeholders in the market, be that sell side, buy side, and as I said, the kind of FMIs. And so it's kind of fine-tuning what is it exactly they need. So in the context of tokenization, there's no lack of interest, but it's creating the secondary liquidity, creating those marketplaces. So that's a big focus of ours, but many others across the market. And there's a positive momentum there that we think we'll really start to see that kind of play through this year.
So he talked about the role that tokenization plays as far as digital assets. So, and he talked about creating secondary liquidity and secondary markets. So think about it. The only transactions going back and forth of real estate would be the buying and selling of a house. Well, what if that house goes on a blockchain and you can start, and they start fractionalizing it, and they can start transacting it back and forth all day, every day. So it becomes something that gets transacted once every 10 years to something that becomes transacted several times a day, you know what I'm saying? Millions of times a day. So that's fractionalizing and tokenizing anything. So that brings me back to let's take a smaller example like video games. let's say you play a sports game and you unlock a legendary jersey that some team used as marketing and they sold it for $1,000. Well, if you buy that jersey on that one game for that 1 year, once it's over, once the next game comes out, that jersey has no use. But if it's on the blockchain and we can transfer items all over for the rest of our lives, then now that jersey has liquidity and people can trade that jersey for the rest of existence. So somebody may buy it for 1,000 and then sell it for 1,200, and then that person might sell it for 2,000. So that's the same thing. So you can take those two use cases, real estate and a digital jersey, and you can use your mind and think of all the things that can be tokenized and now created into a secondary market. So take that as you will. We've gotten to it a million times, but that's one of the main things that excites me about the future of blockchain, tokenization, GameFi, and decentralized finance as a whole. So the last thing I want to get into is this story about a Texas man who bought a home with Bitcoin gains and was charged with filing false tax returns. They only give us two small paragraphs because it's Forbes and they make you buy everything and it's whack. A federal grand jury has indicted a Texas man with filing fake tax returns and structuring cash deposits to avoid currency transaction reporting requirements. According to the indictment, between 17 and 19, Frank III of Austin, also known as Paco, filed false tax returns that underreported or did not report the sale of $4 million worth of Bitcoin in which he had substantial gains. I'm going to tell you right now, when it comes to Bitcoin and cryptocurrencies, do not try to do fraudulent activity. Do not try to scam people. Do not try to avoid your taxes. When people hear about cryptocurrency, those are the first three things that they think about. But in reality, it's the worst thing to do. Let me tell you why. All cryptocurrencies are underpinned with blockchain technology. The main driving point of blockchain technology is transparency and immutability, which means everybody can see what you do with cryptocurrency. That's why the argument that cryptocurrency is used for fraudulent activity, and pretty sure people do use it for fraudulent activity, but that's the main driving point. That's a very, very bad argument because I'm going to show you something. This is a blockchain manager. Every cryptocurrency has a blockchain manager. You can see the latest blocks and the latest transactions, and it's updated by the second. So if you want to try to avoid taxes with cryptocurrency, that is the worst possible idea you could ever think of. You're not going to be able to avoid it because you don't have to be a specialized analysis for the IRS. You can just pull up a block explorer like this and see the transactions. And if they know your wallet, which I'm pretty sure the federal government can know your wallet, they'll just type it in and they'll be able to see everything that happened. You're not going to be able to hide cryptocurrency. So all that nonsense about cryptocurrency being used for this and that, I'm pretty sure people do fraudulent miscellaneous things with it, but it's not a good idea because everything is transparent. This is Etherscan. So this is for the cryptocurrency Ethereum. Every cryptocurrency has a block explorer, but there's a section called latest transactions. Let's go to view all transactions. It's updated by the second. Let's refresh it. The last 11 seconds. 1, 2, 3, 4, 5, 6. The last 17 seconds. It's updated by the second. So you'll be able to see all the transactions that go on. If I wait a couple more seconds, I'll be able to refresh it again. Cryptocurrency is the worst thing to try to hide anything on. It's the worst thing to try to scam somebody on. So don't do it. Don't be a part of any scams. Don't try to scam anybody. You wouldn't do it with stocks and real estate. So don't do it with this. We have to kill that narrative that that cryptocurrency is a bad thing, because it's really not. You can pull up everything that goes on. So you can't hide anything. But that's it, man. I just wanted to hit y'all with a quick video. Hit that like button, subscribe, and drop a comment because we grow in this family. And like always, I appreciate y'all for rocking with me, man. I'm gonna holler at y'all.